Mohnish Pabrai recently gave a talk to the students at Boston College, and in my last video on this talk, I covered Pabrai's discussion of investing in monopolies or companies with deep, durable moats. This talk was one of the better talks I've seen Pabrai give, and his coverage of the ideas that competition is for losers is a great topic to study for investors. So I definitely recommend you check out my part 1 video after you watch this video. But in this video, I want to cover the other important topic that Pabrai covered, which were his thoughts on Tencent, the Chinese tech giant. Pabrai already has a pretty sizable investment in another Chinese tech giant, Alibaba. And based on his discussion, it sounded like there's a good chance that he has already invested in Tencent, or he's heavily considering it. Pabrai seems to really admire the leadership at Tencent, and he seems to really understand the business model of Tencent, as we'll see with his excellent metaphor for the business model of Tencent. I've taken a look at Tencent and I made another video about that company, but based on this talk, it seems like a good idea to take another serious look at this company, especially because of how much praise Pabrai gives the management and the business overall. Let me know in the comments below if you watched this talk and if you enjoyed his discussion about Tencent and if you learned anything new about the business from it. Okay, let's jump into Pabrai's thoughts on Tencent. Pabrai in the past has definitely talked about Tencent, more specifically through the lens of investing in Naspers. One of the key factors when he was talking about Tencent this time was his interpretation of Pony Ma, who is the CEO of Tencent. Now, if you haven't heard of Pony Ma, then that doesn't surprise me because the dude is basically silent, stone cold silent. Earlier, I was talking about how Jeff Bezos really tried to keep AWS under wraps so that he could take advantage of the first mover advantage in a really capital intensive business. Well, Pony Ma has basically operated Tencent in the exact same way the whole time with almost every segment of the business. One example that Pabrai gave of Pony Ma's tight-lipped behavior is the fact that they'll report the user growth for the WeChat platform in the annual report and say users grew by 33%. And there's a statement of fact, and that's it. There's no explication. There's no context around the growth at all. What happened, and you're not going to get any more information out of me than necessary. And the reason Pony does this is probably because A, he doesn't want to tip his hat to regulators, and he doesn't want to tip his hat to his competitors. So I have to admit that Pabrai pretty much gushed over Tencent and over the CEO, Koos Becker, who is the CEO of Naspers and Prosus. Basically, he called Koos Becker Nick Sleep on steroids, which is some of the highest praise anyone could receive. If you're not familiar with the story, Koos Becker, basically back when Tencent IPO'd, bought about a third of Tencent and has sit on his hands on this position, not selling a single share. Recently, they did actually sell about 2 or 3% of the company, but Pabrai revealed in the talk that he was speaking with some investor relations folks over at Naspers, and they're basically never going to sell their stake in Tencent. Pabrai said that Koos Becker thinks that Pony Ma is actually the greatest capital allocator right now, running a big business, better than the CEOs of Apple, Microsoft, even Jeff Bezos over at Amazon. Pabrai said that besides Tencent and Amazon, management of these large tech giants don't really understand capital allocation, or at least don't execute it all that well. As I showed earlier, looking at the financial statements for Google, they just have a ton, and I mean billions, over $100 billion of cash just sitting there in their bank accounts. Surely it's the same thing with companies like Apple and Microsoft, where they can't do anything besides gush cash, and they can reinvest in their business to an extent, but otherwise, maybe they can perform some small dividend payments and some share buybacks, but otherwise they're basically just hoarding cash. Now, Tencent and Amazon, on the other hand, are reinvesting vigorously into their core businesses. As we saw in the income statement for Amazon, their net income is growing at a very modest clip, and their capital expenditure year after year continues to balloon. In Tencent's case, we can take a look at their capital expenditure numbers and see that it is also continuing to grow year after year. They're spending more and more money reinvesting into their business to continue to grow. Now, the nature of Tencent's business is that it's a lot more capital light or less capital intensive than a business like Amazon. So they have been struggling to keep their cash balance down. Pabrai actually called the Tencent model a better business in his opinion over the long term because they don't have those extremely expensive investments like Amazon does. And while Amazon might have potentially better service or a better connection with the customer, at the end of the day, they still need to own basically everything that they need to run their logistics operations, their e-commerce business, and basically Tencent doesn't need any of that and probably won't ever invest in any of that. So that brings me to the two-prong approach of Tencent's business model according to Mohnish Pabrai. Pabrai eloquently names this the Bazooka Model, which I think we can learn a lot about Tencent and about reducing the complexity of a business into a pretty simple model that actually makes a lot of sense. So if you're not too familiar with Tencent's business model, I did a video over here with Frank Tabor if you want to check that out after this video to get a little bit of a primer on their business. But according to Pabrai, Pony Ma has two methods for achieving greatness within his business. Pabrai uses such descriptive language, it's going to be hard to forget this bazooka example. But the first missile within that bazooka is what he calls Pony Ma's army of software engineers. The best of the best engineers, and even your run-of-the-mill engineers who don't command all that much money, they still can basically create something out of nothing through the power of code. It's pretty much the ultimate capital light approach to building a business. You've got to pay their salaries, and sometimes that can be within the millions of dollars for the best engineers. But other than that, and buying their laptops and maybe providing them with a nap pod, they're off to the races, and their return on that investment is going to be massive. Much of Tencent's business comes on the software side, whether it be gaming, as they are the largest gaming company in the world by revenue, or through their ecosystem of apps such as WeChat or WeChat Pay. So basically, Pony's job every year is to continue to build this army of engineers who are in turn going to throw things at the wall, hopefully build high ROI software that the whole world at some point can utilize. Pabrai mentioned that this side of the business, the software side, has historically returned somewhere around 60% annualized. That sounds like one of the best businesses in the world. And Pabrai even said that he wouldn't be surprised if Tencent were the biggest company in the world in 10 years. The second bazooka is Pony Ma's army of digital Warren Buffetts. So earlier I mentioned that Pony Ma does not like to invest directly into the hard stuff, the warehouses, the trucks, everything that Jeff Bezos and Amazon really want to control. They want to control their supply chain. Instead, what Ma tries to do is make small to mid-size investments in other companies. So they have exposure to all that. For example, they have other investments in Chinese giants like Pinduoduo, and in JD.com, I think they have they own about a fifth of that company. And that's basically the Amazon of China. So they have this investment portfolio of these wonderful companies that historically has returned about north of 30% per year. So whatever money can't be spent building out the software side of the business, he wants to in turn take that and try to make investments both domestically in China and internationally. So basically that's the bazooka approach that Tencent takes to dominate. And Pabrai didn't want this to be a stock tip or anything, but he said basically that there's a high probability that the way that the business is configured right now, that it's going to continue to dominate for a really long time. He thinks that it's pretty likely that Tencent would be the largest company in the world in about a decade or so. So one of the things we can do as investors is to point out these companies that are clearly showing signs of some massive competitive advantage and really do the digging to figure out what's causing that advantage and what are the chances that those advantages are going to erode over time. He said that's where the big advantages lie. And he even recommended near the end of the video that if he were managing small sums or just starting out, because he's talking to a group of students, he said that he would be looking for the Tencents and the Alibabas of tomorrow. So look for these companies that seem to be slightly misunderstood by the market, that clearly are firing on all cylinders, have wonderful business models, and figure that out before the market recognizes it. So is it possible that Mohnish Pabrai already invested in Tencent? One piece of evidence that I'm looking at is that, first of all, Pabrai gushes at length about the Tencent business model. Secondly, he was asked about political risks in China, and the student said, are you worried that there could be regulatory or political risk that the business could basically be thrown into upheaval based on something that the government does? Pabrai admitted that yes, that is a possibility, that things can change like that. And that's why he doesn't have only one bet. I don't know if that means he's talking about his entire portfolio holistically, or if he is specifically talking about investments in China. So I'm kind of reading it more as he has more than one bet in China specifically, because that's what the topic is about. That, of course, is speculation on my part, but I thought that was interesting to point out. And Pabrai's been talking about Tencent for a long time, and it really, especially now that he's gotten to this point of understanding the business, it wouldn't surprise me at all if it shows up in his portfolio. It feels like Pabrai could go on and on about Tencent and how beautiful that business model is to him. And that was one of the key takeaways that I had from this talk. But of course, Pabrai goes into a lot of detail and answers a bunch of questions about Alibaba and current books he's reading and things of that nature. So if you haven't watched this video yet, I would absolutely recommend it. You watch it start to finish multiple times over, because it's one of the best talks that I've ever seen him actually give. And if you enjoyed this video, you might enjoy the first part of this two-part series over here, where I talk about Pabrai's thoughts on monopolies and investing in companies with durable moats. Thank you so much for watching this all the way to the end. Please like the video and subscribe to the channel if you want to stay up to date with more videos covering great investors like Mohnish Pabrai. Thank you so much for your time, and I will see you in the next video.